Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two high-yield dividend stocks that were recently purchased by billionaire John Paulson's family fund. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, once again, we are discussing dividend stocks today because who doesn't like some solid passive income? Today's stocks were recently purchased by billionaire John Paulson's family fund. So who is John Paulson? Paulson got his start in hedge management in 1994 with $2 million worth of initial capital. He was successful, and by 2003, he was managing $300 million in assets. It was 2007 that Paulson broke the mold. He anticipated the coming crisis in subprime mortgages, invested in credit default swaps to take advantage of it, and in what some describe as history's single greatest trade, he made a personal fortune of $4 billion. So we're taking a look at a couple stocks recently purchased by his family fund with yields over 5% and some pretty attractive upside. Just before we get into that, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's get right into our first dividend paying stock. We're going to take a closer look at ExxonMobil. Their stock trades under the ticker XOM and is currently priced just over $52 per share. In the top right, you can see their dividend of $3.48 for a healthy yield of 6.1%. Exxon is an oil industry giant with a focus on three different divisions. Chemical, where their products serve as the building blocks for a wide variety of everyday consumer and industrial products. Downstream, where they manufacture and distribute products derived from crude oil and other feedstocks, and upstream, where their understanding of the global hydrocarbon endowment, coupled with their unique geoscience capabilities, allows them to identify and prioritize the development of the highest quality resources. With operations around the globe, they're one of the world's largest publicly traded energy providers and chemical manufacturers. ExxonMobil has had a presence in the United States since 1870. They're a direct descendant of John D. Rockefeller's Standard Oil Company. Today, ExxonMobil holds an industry-leading inventory of resources. They're also the largest refiner and marketer of petroleum products, and their chemical company is one of the largest in the world. ExxonMobil is working to reduce emissions as they focus on solutions for hard-to-decarbonize sectors. This includes fuel cells for lower-cost CCS, or carbon capture and storage, and hydrogen, as well as advanced biofuels. Exxon recently shared their Q2 earnings report, where they saw earnings and revenues return to pre-pandemic levels. Increasing oil and natural gas demand boosted earnings, which reached $1.10 per share, the best since the fourth quarter of 2019. On the revenue side, the top line reached $67 billion, a level also not seen since the second quarter of 2019. The company generated $9.7 billion in cash flow from operations during the quarter. Exxon has been fairly consistent with their dividend as well, and although they didn't increase it during the pandemic, they did still pay it out consistently. The company's very first dividend was actually paid back in 1911. In the second quarter, Paulson purchased 500,000 shares of ExxonMobil for a holding that is now worth about $27 million. One analyst weighing in on the stock is Phil Gresh from JP Morgan. He wrote that Exxon reported a solid Q2 and provided constructive third quarter guidance that suggested upside to numbers in our view. Bigger picture, CEO Woods sounded encouraged by initial discussions with the new board, with good alignment around capital discipline, the importance of a strong balance sheet, etc. All in, we think Exxon is continuing to take steps in the right direction, and we think a fresh set of eyes is likely to reveal more low-hanging fruit on cost reduction potential, asset sales, and faster debt reduction. Phil is one of 13 analysts that has a current rating on the ExxonMobil stock. And it does come in as a moderate buy, with 5 buy ratings, 7 holds, and 1 sell. The average price target is $69.50, which would be an upside potential of 33% for this next year. Taking a look at our detailed list of analyst forecasts, we do have a few 1- and 2-star analysts on there, but also a few 4 stars too. So looking at the most recent 4-star analyst, we do have a hold rating that would still have an average upside of 18%. On the high end, we have a $90 price target from the Bank of America, which would be a 71% upside potential. The second dividend-paying stock picked up by Paulson is BP. Trading under the ticker BP, they're currently priced at $23.58 per share. In the top right, you'll see their dividend at $1.31 for a yield of 5.27%. BP is another world giant in the oil and gas industry, and they're also a big player in the petrochemical industry as well. While much of their business is done under their main brand BP, they also own AMPM, Castrol, and Amoco, to name a few. BP focuses on integrating energy systems, partnering with countries, cities, and industries, and driving digital innovation. They have 3 areas of focus, with low-carbon electricity and energy, convenience and mobility, and resilient and focused hydrocarbons. Since BP petrol first went on sale back in the 1920s in Britain, their brand has grown to become recognized worldwide for gasoline, transport fuels, chemicals, and alternative sources of energy such as wind and biofuels. They aim to be a very different kind of energy company by the year 2030 as they scale up their investment in low carbon, focus their oil and gas production, and make headway on reducing emissions. BP has had a hard time since the pandemic started, but in their recent Q2 earnings report, they did come in with better than expected results. At the top line, the revenue of $36.4 billion was flat sequentially, but up 14% year over year. Earnings per share came in at 92 cents per share on $3.1 billion in net profits. Now, this compares to the massive net loss of $16.8 billion reported in the year-ago quarter. Per share, that Q2 2020 loss was $5.01. This year, the company reported accumulating a cash surplus of $2.4 billion. The company felt confident in their second quarter results and made this clear that when the company announced that it would fund $1.4 billion in share buybacks for Q3, anticipating $1 billion in buybacks per quarter going into 2025. Paulson acquired a new stake in the BP stock. He purchased over 1.9 million shares. That would make his current holdings worth over $47 million. One analyst covering the BP stock is Ryan Todd from Piper Sandler. He says that while BP's quarterly result was a modest beat, a material acceleration in shareholder returns was a material positive surprise. BP's willingness to return to dividend growth addresses what we viewed as a relative disadvantage of its previous strategy and positions BP well versus peers in the increasing arms race to return cash to shareholders. Now, the BP stock just has 4 analysts with current ratings, and they are split down the middle with 2 buys and 2 holds. The average price target, though, is $33.33, which would be an upside potential of 41% over this next year. Our most recent rating is a hold, but that even has a 31% upside. So there are 2 stocks picked up recently by Paulson, both paying a solid dividend and some future growth potential. What do you think about these 2 companies? Make sure to let me know in the comments down below if these were already on your radar, maybe already in your portfolio, or if they're brand new to you. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you all so much for watching, and I'll see you back here next time.